Welcome to Home Equity Secrets. I'm Carl Christian, CEO of the Nice Agent Co. Join me as we reveal how to learn to earn through smart homeownership. Discover expert insights, practical advice, and inspiring stories on turning your home into a powerful financial asset. Whether you are a first-time home buyer or a seasoned investor, let's unlock your home's true potential together. Welcome to Home Equity Secrets. Welcome to Home Equity Secrets. My name is Carl Christian. I am your host. I'm the broker of the Nice Agent Company. Today, we are about to talk about mortgages, about life. Thank you so much. If you have not subscribed yet, please subscribe to the podcast. You are on Spotify, you are on Apple, YouTube, wherever you are, please subscribe because this podcast is about empowering people, about guiding them into their life journey. Today, we have a loan officer with us. His name is Jeff. Jeff, can you please introduce yourself to everybody?
Hey, Carl, thanks for having me today. The nice agent, I love that. We need more nice people in the world today. That's awesome. So I know you're doing good things, but yeah, Jeff Chisum, I've been in the mortgage business originating loans since, so if that sounds familiar, yes, that's right around the crash. Yeah, that's right. So yeah, I'm a survivor, kind of got through that season and been through other seasons, roller coaster. The business is cyclical, the markets are cyclical, but through all that have been able to help a lot of families. And we have a pretty simple philosophy in our business, my team's business, which is be really good at communication, have a heart to educate, and always do the right thing. And that seems to have worked really well. So yeah, here recently, over the past 5 years, we've really transformed our business and evolved to where really 100% of our business is helping people buy short-term rental properties. So we're providing financing, not just the financing, but also financing strategies, because a lot of our clients that we're working with, they want to build a portfolio of these types of properties. So
that's interesting.
Yeah, and it's at the forefront of that has been the educational piece to educate people with the information that they didn't have before. The big opportunity has been with the 10% down second home occupancy loan. So been able to educate a lot of people there. And we can touch on this later because I love the title of your podcast, Home Equity Secrets. And yeah, one of the biggest secrets in the United States is the all-in-one mortgage. And we'll talk about that, here later.
Sure.
But it is the traditional 30-year mortgage is stealing people's wealth.
I do believe that.
Let that sit in for a second.
I do believe that.
The traditional, the one that we all use, all of us, the one that we all use is stealing people's wealth. So there is a smarter way to do it. There is a better way to do it, and it's not a gimmick. It's not, any type of get rich quick scheme. So I really think that along with continuing to help people with financing to buy and build wealth through short-term rentals, I can also educate people on the all-in-one mortgage to help them build wealth through that tool. So yeah, when you first, introduced me and said that we were going to be talking about mortgages, hopefully we didn't get people that just kind of tuned out. It sounds,
you have two words that you keep using that I admire. You keep saying help and you keep saying educate. And I do believe this is what the industry is missing. And this is what the humanity in general is missing. We no longer focus on helping each other, and we no longer focus on looking for education, because now when you log on Facebook, you log on YouTube, there's everything. So if you're not seeking for the right education, guess what? They are inputting the wrong one into your head anyway. So it is something that's very important. So I really admire you for saying that. So definitely I'm going to pick your brain for sure, because now we're talking my language. Hey, buying properties, making money, love it. So let's go back at the beginning. 2008. I started in 2003, so I'm also a survivor. So, what triggered that? Where did you come from, and then say, "Hey, mortgages is what I'm gonna do in the worst season of it all"?
Yeah, I mean, really, it was a God thing. I
Wow.
really was at a season in life where I was at a men's Bible study, and back then that was kind of an unusual thing. Even though I grew up with, in the Christian faith, what wasn't something that I did, and so I found myself in a position where I was unemployed. I'd been laid off at this Bible study, and they asked for prayer requests. And I'm like, "Oh, I've got one." I've got one right now. And so just kind of shared. And then this guy came up to me afterwards and said, "Hey, maybe we should visit." And so ended up interviewing, and they asked me if I had any experience with mortgage, and I said, "Well, I have one." And so, but couldn't have been in a better situation and circumstance, being brought into the business by the largest financial institution in the world. So we had world class training, not only from the product standpoint, but also that was kind of ushering in this new, the new disclosures and the way that you had to present things and the things that you had to say. So I was very regimented in, you better be following the letter of the law.
Yep, if
um,
you do it right.
yeah, that's
Right.
exactly right. So, that was impressed on me, from the very beginning, that my calls were being monitored. I had to give my, NMLS license 673623, which, if you don't know, somebody with 6 digits in their NMLS number, they've been in the business for a long time. So,
That is a true statement. That is a true statement.
yeah, so being in the call center environment was another blessing because, if I had a question, I could stand up, and I had literally 200 other people, 200 loan officers in the room with me that I could ask. So I, yeah, kind of, paid my dues for 3.5 years in that call center environment, went to retail with Chase, where I was in a bake branch, got to work with some high net worth clients. So that was good experience. And then after about 2.5 years of that, came home to my wife and I said, "Hey, the big banks, they do banking well. Mortgages are a different animal. We're kind of struggling to close things on time. So if I really want a career in this business, I really need to attach myself with a company that really specializes and does mortgages." So that kind of brought me into the world of independent mortgage banks, self-sourcing my own business, realtor relationships, and we grew to a point, and I really think it was that education, always do the right thing, communication, to where 2018 was my first year to achieve top 1% in the US for yeah.
That's awesome, man. Awesome.
Yeah. So we've held on to that since then. So, it's built into something pretty significant.
How does customer service actually get you there? Like, how's different your customer service from other people? What did you do that makes you stand out?
Yeah, customer service is everything. The big one is, and the nice thing is, it's not that hard. Like, the bar is pretty low. I was seeing opportunities where, I called so and so lawn officer and I hadn't heard back from them, or I'd been working with someone and they were great at the beginning and then didn't hear from them. So that's the other thing is, I knew if I worked really hard about doing the right things that I could do really well. And that's definitely, one of those is just calling people back, you know, in a timely manner, following up with them. That's the other thing that I heard was, the money is made in the follow up, actually following up with people and, having a system, because once you build to a certain level, you can only work with so many people. And if you don't figure out a better way to do it, you're going to hit a ceiling. So that's the other thing that we designed. And I learned, it's one thing to go out and get the business, but if what your efforts are yielding is significant, it may not be a good thing if you're not ready for it. So, I found out I needed to build the machine. I needed to build a system that was customer friendly, that, was automated in the right places, but also had the personal touch in the right places as well. So, you pair that up with education.
It's
It's
the
it's a
recipe.
good recipe. Yeah. Hey, we use the same word at the same time. That's right. Recipe.
Jeff, one thing that I always tell everybody when it comes to customer service, it's look at Amazon. All Amazon did is create a customer service between the buyer and the seller and a system of follow-up.
Yeah.
And then look at it today. That's how important what you're saying is. And a lot of people don't understand. If you're in business for yourself, the best thing you can do is follow up and give great customer service. The minute you do that, yes, you will be part of the top 1%. It's just the way it works. So if anybody's listening to us, please, you're getting some very good gems here. So yes, customer service is key. Jeff, what
Well,
does STR stand for? Sorry if you're insisting.
no, the other thing that I'll throw out there real quick, because I think that it's kind of crazy talk, but I know from experience it's the right way to go. So if you're working with people that, whatever business that you're in, they're very successful, they have a lot going on, their schedules are full. So I kind of equate it to, Carl, I hurt my knee and I need to go see an orthopedic. I know it's really screwed up. And I call into a doctor's office, and the person that answers the phone says, "Hey, just 1 second. Let me get the surgeon on the phone." And he says, "Hey, come on in tomorrow. I bet we can get this surgery done by the end of the week." I'm gonna be a little hesitant that this guy is actually really good at what he does because he's so easy to get a hold of. Or you call in and they tell you that, "Hey, we'll call you back." And then they call you back and they leave a message, you call back, you get into that phone tag situation. So I learned a long time ago that the people that you really want to work with have a system where they schedule phone calls. So it's not a case of, "Hey, just give me a call." It's, "Hey, so we're not wasting each other's time because I know if you're like me, you don't like to play phone tag. Just hop on this link and schedule a call with me." And they're
Yeah,
like, "Oh my goodness, what a breath of fresh air
it's true. It works.
that you
It works.
didn't." Yeah, yeah. That's the other thing that I would throw out there to people that, maybe you have your own business, you're just super busy, is find a way to work in your system where you're not wasting your time or frustrating your client with playing phone tag.
It is very important to deal with systems. And I say to everybody that you actually dealing with system in your daily life. You just never pay attention to them. Believe it or not, we wake up the same way, we brush our teeth the same way, we shower the same way. Like we do have system. And sometimes when we get into our self-employed environment, we forget about it all. We just keep going with the day. The day turns you left, right, up and down, and you have no idea. And guess who suffers? The customer. And when the customer suffers, you suffer. So it is very important that you understand getting a system together. This is where your success is going to come from. So the next
Absolutely.
question that I have was the name STR Home Financing. Can you tell everybody what STR stands for?
Yeah, that's a great question because it's kind of next level. So, you know, Carl, if you needed something to blow your nose with, you may say, "Hey, Jeff, do you have a Kleenex?" And it's just kind of that, it's the name of a product where it's a company name used commonly for everyday item that we use, which is the thing that we blow our nose with, a tissue. So Kleenex. So a lot of people will call these properties that you stay in for a weekend, so the beach house, the cabin in the woods, they'll call them Airbnbs. Well,
Yes.
that's the name of
That's
a company. So
true.
for our,
The same with Colgate, the same with Frigidaire. Like, you know.
yeah, that's exactly right. That's exactly right. Give me a Coke. Well,
Yeah.
yeah, Coca-Cola is a company. So I'm going to give you some next level information for people that are, thinking about going down the route of buying an Airbnb. ProTalk it's an STR. It's a short-term
Sure.
rental. So
Nice.
when we're in our networks, please don't call it an Airbnb. You're going to embarrass yourself. Call it an STR.
That is good. That is really good. Yes, short-term rentals. So I heard that you actually, this is the backbone of your business. You kind of specialize yourself in that. So now let's pretend that I would like to get into the short-term rental business. How would I go about it?
Yeah, so I tell people, and it's proven over and over again, that really before you do anything else, get pre-approved. So if you have the idea that, yeah, and the way that it started with us, and I think people would resonate with this, is I have 4 kids. We have a family of 6. So it became our go-to means of accommodation anytime we traveled that we were staying in short-term rentals. So a house where, we were all under the same roof, everybody was sleeping in the same under the same roof where we were. We could cook our own meals. So it just made more sense than getting 2 or 3 hotel rooms. And then we stayed in enough of them where we stayed in some nice properties in nice areas, and we're like, "Oh, someday we're going to own one of these. We're not going to stay in somebody else's. We're actually going to own our own." That happened to us over 5 years ago. We went to this area in north central Arkansas, the Ozarks, hills and trees and beautiful lake and this beautiful home. And we sat there and said, we are going to own one of these. And so we looked at real estate prices in that area. They were still fairly reasonable compared to the rest of the United States. And so we just started looking, and we had gotten to a point where it kind of coincided with 2018, where we were beyond the ends meeting. We had surplus, we had excess that we wanted to be good stewards of, and we had researched long-term rentals, we had looked at other things, and got to this point where this was exciting for us, buying a vacation property, a vacation rental. And probably 4 or 5 years before that, I had come across an email that talked about Fannie Mae changing their policy around the second home occupancy loan. And I was like, this seems fairly significant. It's not my business, because back then I was the local guy doing local
Mhm.
deals, primary residences, but I was like, that sounds like a big policy shift. And what it was is Fannie Mae changed their policy to where they were making it more friendly for how people were really utilizing these properties. So before, their policy, really, there was a bend towards not using these as short-term rentals. But that's
Okay.
what people were doing, right, Carl? They were buying these properties and they were renting them out, whether it was through a local management company or as Airbnb became more popular, they were starting to put those on there. So Fannie Mae just made their policy to where people weren't in that gray area and felt like, oh gosh, am I committing mortgage fraud here?
Exactly. Exactly.
So, with my own personal situation, I went back to that, did more research on it, and found out that this was my opportunity, the 10% down second home occupancy loan. So, back to your original question on getting pre approved, so many people just don't know where they stand. And when they hear 10% down, it really gets people's attention, because they've either been told or they think that they need at least 20% down, and that
Got it.
it's double the amount. If on a $500,000 property needing 50,000, you have in your
Worship.
mind you need 6 digits. You need a hundred
Yeah.
thousand, and
Yeah.
for most people, that's not a feasible option. So, yeah, first step to me is, what can I qualify for? What do those numbers look like? Do I qualify for it? And once you're validated, and see this over and over again, and I tell people all the time, our goal on the other side of the pre-approval process is to really put you in a position where you feel like take action. And so, once you've been validated, once you know the numbers, it really puts people in a situation where they feel like, yeah, we can do this. That number doesn't scare me. We've got the down, which can come from money and deposit. It can come from, uh, borrowing against a 401k, not withdrawing money from a 401k, borrowing against a 401k. It can come from a HELOC. So we talk about home equity secrets. I did a podcast episode called Creating Your Own Down Payment Bank. And that's really
Nice.
what it is yeah, it's leveraging your static equity through a HELOC to fund your down payment and closing cost to go and buy that cash
And
flowing vacation rental.
do you still realize with the 10% down with mortgage insurance involved, they still turn out a profit?
Oh, I'll tell you, we've got a way to structure these where we put the first lien at 80%. We do a second at 10%. So you're not paying the PMI. So, but yeah, to answer your question, absolutely, these properties need to cash flow. Now, what you need to take into consideration is the tax benefits. So I'm not going to get into it in detail because, for one, I'm not licensed. I'm not qualified to talk about tax benefits. But that's one of the big things that people miss about this asset class. And it's called the STR tax loophole. So if you want to go out there and research yourself, Google STR tax loophole, and you're going to find it's easier to qualify to take advantage of the tax on a short-term rental than it is a long haul. So what you're going to hear about is your ability to have write-off go against your W-2 income. There's also the accelerated, when we talk about marginal cash flow just based on expenses and income, we also have to take into consideration that, hey, at the end, there's a pretty good opportunity if you're working with EPA that you're going to get a pretty sizable tax benefit there. So kind of need to work that into your numbers on a cost average basis over the year.
While you're talking, I'm thinking, like, I know everybody's always waiting for that one question, so I'm going to throw it out now. The question is, I'm pretty sure the answer is going to be obvious, Jeff. If you have a friend, married friend, they have two toddlers at home, they're sitting on a $500,000 home equity, what would your personal advice be to them?
It would, yeah, no, and I go into some of the nuances on that episode. But, the home equity line of credit is a great way to separate that acquisition debt. So you leave your first mortgage alone. Because that's what someone else may advise you on is, well, do a cash out refinance. Well, that's probably coming from a loan officer who makes a commission off of a cash out refinances versus a HELOC. So always do the right thing, Carl.
Always.
That HELOC, so your W-2 income, your personal income is paying back the mortgage. That HELOC, and we don't want to over leverage ourselves. So you never want that line of credit to be more than 80%. And then we're only going to take out the 10% down payment, 3 to 5% for closing cost. And then about 10% you need to budget for
reserves.
Reserves, making the property rent ready, because that's the other thing is you don't want to go into this deal feeling like, oh, we really got to pinch pennies here, because you don't want to stay in a cheap property. You don't want to stay in something where it looks like, oh, they really went cheap here. I'm never coming back. You want raving fans. So you want to do it the right way. You want, to be able to do it in a way that's going to perform. But we're not going to over leverage ourselves. And then we talk about cash flow. The cash flow projections on that property should achieve a level where it's going to pay back the HELOC. So the burden of repayment is on the property, not your W-2 income.
Wow, that is a plan. I'm telling you, because at the end of the day, not only you're making cash flow, but that property is also increasing in value. And hey, to me, I think everybody should do this, because at the end, what I'm always asking is this. You work 20 years, 30 years at your job. You own a property. That's great. Now, imagine when you're retiring, that property Jeff just bought you is actually paid off as well. So now you have income that is coming in and you no longer have to move. And a lot of people, they're going into nursing homes just because they cannot afford their home anymore. A lot of people are going to sleep with their kids because they cannot afford their home anymore. So it is very important that we start planning today for the next 10, 15, 20 years. Jeff, that is a great plan. Jeff, how
Well,
could somebody, sorry, go ahead.
no, and that's exactly right, Carl. And I one of the big or the most instrumental books that I read was Rich Dad Poor Dad, and he talks about, your primary residence is really a liability unless you're using it to leverage and go out and buy cash flow producing properties. So you're
100%.
exactly right. And the beautiful thing about this asset class is it's got the fun factor.
Yeah.
So we call these lifestyle assets. So I hope somebody in, their 20s, their early 30s, and it's really never too late. Imagine yourself owning about 10 of these properties once you hit retirement age. And so instead of being in that situation where, hey, son, daughter, I'm gonna have to come live with you because I can't afford this house anymore. You're saying, hey, you want to meet me at the lake house this weekend? It's supposed to be 72 degrees. I plan on living there in the next month, and then I'm gonna go live in the cabin the next month. These lifestyle assets, you really can set yourself up for a life that you don't want to take a vacation from.
It's important, very important. Jeff, if somebody needs to contact you, how can they find you?
Yeah, the absolute best way to connect with me is through my website, strhomefinancing.com. And I
Nice.
tell a little bit about our family story and the short-term rental financing, our financing journey, or our short-term rental journey. Grab a little bit of information about the dream. So it's, hey, what area are you interested in? Price range, a few other questions. And then I have 4 videos where I talk about the different products that we use, the process to get pre-approved, and the value of working with our team. It takes about 20 minutes to watch those videos. And I made those videos because I was in a need of trying to reduce my 1-hour consultation phone calls that where people were just listening to me regurgitate information. And I was like, maybe I should just make videos and tell people to watch those instead.
Yeah.
So that's what we do. And then you can schedule a call, which is just 15 minutes of let's hear about the dream. Tell me what, questions you have, and then send them on to the next step. So yeah, people have really appreciated because we live in this world, and you and I talked about it earlier, where people up to a point want to self-educate themselves, which I
Yeah.
get that.
Yeah.
Uh,
A lot.
and then they want to talk to someone in person. So that's why that website's designed the way it is.
You know, one thing I admire about your journey, you are part of the top 1%. And guess what? You zero niche on one thing. And I'm always trying to tell everybody, like, when you do that, it gives you the power of getting there faster. But a lot of self-employed, a lot of entrepreneurs, they do not understand that concept. The concept that if you zero in on something, you like a sniper rifle. Now you will get there a lot faster and a lot on target. And I admire that because you said that about 2018 it started, and then boom, when you zero in, and then you're top 1%. That I would love for you to talk a little about and give people advice on that little particular section.
Yeah, well, and it comes with a mindset. It absolutely does. And probably back in 2015, I had this vision of sitting at a table for 10. So it was my 4 kids, their spouses, and my
Oh,
wife at the
nice.
other end. I was an old man. We were laughing. We were having a good time. And it was just a vision of God's faithfulness in my old age, that all of the things that we go through in life, it'll come to a place where you sit down at the table and you just get to enjoy it. And then my youngest son is adopted. He was one of the 4. And then we came back about a year later and talked about fostering again, which I did not think we would do again, because it's everything that you can imagine it is. It's hard. And you don't necessarily just voluntarily put yourself in hard places like that. But, it definitely has to be a calling. But when we brought that up, my first thought was, what about the vision? I mean, it was so nice and neat. What about the vision? And the message I got was, live big enough, you don't even dream big enough. And so, that second vision was about 2018, the beginning of 2018, and that really catapulted me to really 10x everything that I was doing. And what I didn't know was that was preparing me for this niche. We were perfecting our systems. We were really just doing everything that we could to become better. And we were just hyper focused on making sure that we were being great at what we did. So we couldn't be everything to everybody, but our team had to be focused on being great at what we did. So that hopefully that answers your
No,
question.
I love it, man. And this, to me, this is what I feel, that sense of peace when you're talking, that sense of accomplishment. And I love the fact that you're always bringing God into it, your God, your calling. And I can tell while I'm talking to you, I can feel that you're at peace with yourself. And to me, that is what life is about. Just like we just said, dreaming big is great. Living big is the ultimate goal. So to me, wow, I cannot imagine me not doing this podcast today.
Oh, I love it. I love it.
Yeah.
Well, and it's that other thing of, I never imagined growing up that I would be the person that would grow up and own a vacation home and achieve that level of significance. And we actually own two now. The other message that I've had in my head, because Carl, we all have different obstacles that come against us. Some are more significant than others. Some, I couldn't even understand that people go through. So but I've had my obstacles. Like, you wouldn't imagine it now, but when I was growing up, I did not want people to look at me. I wanted zero attention. I wanted to stay under the radar. I was a very shy kid, very nervous around other people. Eh, and you would never guess that about me today. And the only reason I could,
The world would have missed someone
oh
if you
man,
think that
I
way.
appreciate that. Well, and the only thing that I can chalk it up to is, yeah, there's no way I could do that. Like I was brought up. I was brought up. But here's my message is, why not me? Why not you? What's in the way? What is getting in your way from being in places of significance? And I'm not saying you got to make a bunch of money, but I can tell you people are watching me. And that's part of what we saw with investing in short-term rentals. And what we realized was, and we couldn't have gotten it any other way. So I could have invested in the stock market, bought long-term rentals, but guess whose attention I wouldn't have had like I did with buying short-term rentals?
Yes.
My kids got more interested when we talk about buying a lake house. And, with that, they got to see us make big decisions, us take action, us put in the work. There's no other way that we would have been able to model that. So when I talk about achieving levels of significance, is that you are doing hard things, or you are doing things that other people wouldn't necessarily do because they're scared or they're fearful, and you get their attention. Like, they want to watch you and how you live your life, because you're doing something significant.
You see the words you're using, man. A lot of people would say richer level of success. You
Right.
say richer level of significance. That means, like, if everybody's listening, we're not talking about making money. We're talking about being significant to your wife, your spouse, being significant to your kids, your friends, your neighbors. And when you get to that level, everything changes. The way you live, the way people perceive you, the way you achieve things change. I just don't know how else to put it but to say, Jeff, I want to thank you, because right now a light bulb just went on my head. I'm gonna say it. I'm looking forward to meet you. I'm looking forward to learn from you, because
Yeah.
I'm gonna say, man, like, this morning I was talking to one of my agents and I told her, if you don't make a plan, you are part of somebody else's plan. So please sit down and make a plan for your life, because, and the thing about it is, like, I was telling her, you are too available. You're always available to do this. You're always available to do that. That's mean you're just part of making somebody's plan better. What about your plan? And I feel like you did this at a very early age, and then here you are today, spending time with your family, building this company. I just admire what you've done, man. I really do, and I want to say thank you for everybody you ever helped.
Well, thank you, Carl. I appreciate that. And the other thing that I would throw out there is we've all been called, and it's a different way to look at, we've all been called to a place of significance. We've all been called to a place of influence.
Yeah.
And that's the way I put it to my kids is we're not called to go out and get rich. We're not called to go out and make a bunch of money. But I'll tell you, when you do things the right way and you do things at a high level and you achieve things that other people don't achieve, you put yourself in a greater place of influence.
That's true. That is so true. And then the universe keep bringing you the stuff you need in order to keep being significant. It's just crazy. Like the other day, I'm going to say that as a calling, about 3 years ago, I applied to be one of the board members of the greatest Haitian American Chamber of Commerce there is in South Florida. And of course, I didn't get it because nobody knew me. I woke up one morning and I'm like, hey, I want to do this. And of course, I kept working with them, doing certain things for them and everything. And 2 weeks ago, at 4 o'clock, my phone rings and say, hey, Carl, how are you? We just voted. You are the new board member. And I'm like, where's this coming from? You know? And you have to put yourself in the position that if you are being called for something and you see it not happening yet, again, keep that word in place, yet. Just keep doing it because you are called for it. Just keep doing it. Jeff, it's been one of the most influencing podcasts that I've ever had since I started Home Equity Secret. I'm going to tell you that today.
Well, Carl, yeah, and I don't think that our paths have crossed by accident. And we were supposed to talk about the 10% down second home occupancy loan financing options. And you know what? This all goes together. I mean, it really does, because if you don't think that you can do it and you think that it's too hard, you don't know what you're doing because you don't know the right things. And so you just go back to what you were doing. It's not going to lead you to where you're supposed to be. And I think that, we're talking about the things that we need to talk about.
Yeah, for sure. And before you even leave, I want to go back into the details of the numbers a little bit. Like, I know objection from some people would be like, interest rate are too high. Why would I go and buy properties now for me to do a short-term rental? The short-term rental market is dying. How would you talk to somebody that have those objections? Because it's in their mind. That's number one. It may not even be true for the area that they're doing it.
Yeah, so, our niche really has been with people that are buying lifestyle assets. So these are places that people are buying in areas that they've vacationed in for a long time. And, back to what I said originally, hey, someday we're going to own this. We're going to own one of these properties, not just, rent it from somebody else. So, if you think about it, cabins in the Smokies, beach houses in coastal areas in Florida, they didn't pop up 4 or 5 years ago. I mean, they've been around forever and people have been renting them forever.
That's true.
So, and I agree, there's bad agents. I won't use the word agent because you're a real estate agent. They're bad players.
Yeah, I know.
Well, no, and that's not where I'm meant to go, but there's bad players when it comes to short-term rentals, and a lot of those stories are in metropolis areas. So they went into the Miamis and the Tampas and the Atlantas and the big metropolis areas. They bought these single-family homes next to people that are doing everyday life, and they got the party house, they got the bad neighbors, they've got the people coming in. They are actually buying they would be in that class of first time homes. They're buying those types of properties. I don't necessarily agree with that route. And a lot of people are being choked out because they're coming up with those rules and regulations that are either banning short term rentals or they're putting a lot of restrictions on them. I'm not a big proponent of that investment lane or that lane, but yeah, the vacation homes aren't going to go anywhere. And with that, You know, you've heard it before, Carl. When was the best time to buy real estate? It was yesterday. When's the next best
All the
time?
time. All the
Today.
time.
I mean, real estate has always been an appreciable asset. Now, have there been times, better times than others to buy? Yes. Have interest rates been lower? Yes. But even if you look at the average interest rate over the past 30 years, we're about average. So we'll never see below 3% again.
Yeah, but at the same time, everything goes up. An example: when we had the rent at 3%, the short-term rental was probably $120 a day. Now you have it at 6% and it's 200 a day. Now,
Right.
it's like, to me, you have to look at it from the numbers perspective, not from an imaginary problem. I call it like that. When people call me and say, hey, oh, interest rates are too high, it's an imaginary problem, because at the end of the day, the property used to be rented at $1,500 a month. Now it's being rented at $1,800 a month. So what are you talking about? So it is very important to me that people understand that. Do your homework, plan, call people like Jeff, and make sure you understand the numbers, because right now you're entering a world of a numbers game. It's no longer what you feel. And what Jeff is talking about is, if you go to vacation in Orlando, maybe twice a year, 3 times a year, you're going to use it. So right now you don't really feel the burden that, hey, it needs to be rented every day. It needs to be rented every weekend, because it is more like a vacation home that is paying itself more than it is a true 100% investment, that if it doesn't rent, you cannot pay your mortgage, you cannot pay your bill. So to me, it is a very good concept. I love the idea.
Well, and it's also a long-term play.
Yep.
So the other segment of people getting into the space that scare me are the ones that say, hey, Jeff, I'm building a portfolio because in 2 years I want to quit my W-2 job. And they're 35, 40, 45 years old. They're in their prime earning years, which I don't necessarily agree with. I don't think it's the right thing to pursue if you want to do it as a full-time job. Now, if you mixed in maybe property management where you built an actual business, plus you want to do your portfolio, I could see that. But the people that expect that I could buy 2 or 3 of these, quit my W-2 job, that scares me. I don't necessarily agree with that.
I
But
don't agree with it either.
for the person that is 30, 35, 40, 45 years old, and here in 10, 12 years, they have a goal to pay those off, they're mortgage free, and then that's part of their retirement plan,
Yeah.
along with their other eggs that they put in other baskets with their other investments. Then that's a good model for me. And that's kind of our model too, is, hey, these things are doing what they're going to do. We're going to work hard to make them perform. They're performing great, but at some point these will be mortgage free, and we'll be paying, they'll be part of our income streams, and we'll be
This is what it is.
maximizing those when we need that income. So
It's a long-term play, everybody. Understand that it is a long-term play. Jeff, this is when we're going to stop. And I want to ask you if you have anything else you want to add to the podcast before we stop.
no, I'm not going to go into details, but you need to look up the all-in-one mortgage. You need to look up the offset mortgage. This is, if you've ever heard anyone telling or talking about, I paid my mortgage off in 7 years, this is what they're doing. They're using a first lien HELOC that has a sweep account where all their income goes into the sweep account, pays down the HELOC, you pay your bills out of it. You're suppressing your balance on a monthly basis in a significant way. The interest is calculated off of that, and ultimately you do pay it off faster. You are saving on the interest, because we are brainwashed in the United States to do a 30-year fixed rate mortgage. And if you look at the amortization schedule, I mean,
It's crazy.
it's crazy.
60%, 70%. It's ridiculous.
Yeah. So here's what I want to leave you with. If your interest rate is above 3%, you're saving 10% on a monthly basis. So 10% of your monthly income is going into a savings account. You're a prime candidate for the all-in-one mortgage. and stop Fannie Mae and Freddie Mac from taking all your wealth.
I would love that. And I would love to have you again on the podcast, man, because this is something that I think everybody should know about. I see it on Facebook, and I'm a realtor. I'm going to say it. I dismiss it because for me, it's just like, people saying things. But hey, today we heard it from somebody that we can trust, somebody that understands it. So please contact Jeff. Ask about the all-in-home mortgage, strhomefinancing.com. Please do that because we need to be better, because that brainwash for the past 100 years, we need to be better. Because when we hear those 3% interest rate, what you didn't know, it was 39%. A lot of people didn't think about that. So there was no such thing as a 3% interest rate for real. It was 39%. So Jeff, I want to say thank you again for being part of the podcast. For everybody that's been listening, thank you so much for listening to Home Equity Secret. I am Carl Christian. Today, you just heard from Jeff about all of the things you can do to better your life tomorrow. Make a plan. That's what it's about. Make a plan. Jeff, I want to say thank you again for being on the podcast, man.
Thanks for having me, Carl. It was a pleasure.